What is going on, investors? Hopefully guys are doing well out there. Today was Nike earnings, and on today's video, we'll get into them. We'll take a look at the very surprise revenue beat. I mean, we're talking about a gigantic surprise over this company, and that's probably going to cause Wall Street to up their estimates for subsequent quarters over at Nike. So that could drive shares even further. We'll talk about just boring old dividends that were up 9% year over year and $1.5 billion worth of share repurchases over the last year over at Nike. We'll take a look at the revenue, the profits, the gross margins. We'll have a China discussion on today's show as well. And then we'll come over here and look at just some of the most beautiful stock charts. I know a lot of you guys watch these other YouTubers and they have you in these stocks that no one's ever heard of and are down 60, 70, 80, 90%. Here's like a 40-year price chart of Nike. And as you can see, it's done nothing but go up. And so sometimes that is boring and doesn't get a lot of views or clicks, but we're trying to make money over here at the Investor Channel, not get into stocks like Tattooed Chef or Shopify. Now, over the last year, stock really hasn't done that well. Down 7%, year to date, up just 2%. That is why we've been in accumulation mode over here. I know everybody's hanging on every word that Jerome Powell is telling you, and you're waiting for him to just give you the all clear sign to buy stocks. Well, you know, if you wait to accumulate, well, you miss the train. This stock over the last 5 years is up 91%. Over the last 10 years is up just 318%. Just a very steady earner over at Nike's. Revenue came in at $12.4 billion in the most recent quarter. That was 14% increase on this one. Okay, I know some of that is priced in the stock already. Okay, you've got a 38 forward price to earnings on this one. Probably will come in just a little bit. It's not a cheap stock, but we're talking about a company that has been around for over 40 years, at least from a public company perspective, and you're increasing your revenue 14% year over year on that top side. That's pretty good, and it beat expectations by a lot, by over $910 million. We'll get into the rest of the financials here in a second, but I wanted to show you that Wall Street is expecting a number closer to $11.5 billion or just 5.6% growth year over year. So when we start to look out for quarter four, really calendar Q2, Wall Street was expecting just 2.6% growth, or $12.5 billion worth of revenue. Again, we just put up a quarter at 12.4. So sequentially, maybe just a small increase. And then obviously we head into the back half of the year, calendar Q3, Q4 for Nike. Obviously, those revenues tend to accelerate as you get later on in the year. Also, you have China kind of reopening. We'll talk about that from an investment perspective here in a moment. Dividends over the last year, up 9% year over year. That's why I continue to hold my Nike stock. I mean, there's a number of reasons why I continue to hold this stock, but number one is they increase those dividend payments time and time again. And on top of that, they're buying back the shares, over $1.5 billion, reflecting nearly 13 million retired shares over the past 3 months. They've got an $18 billion program, of which it appears that they've only bought back about $3.4 billion. So they're just going to continue to burn this cash flow on buying back the shares and likely increasing those dividends once per year. Those revenues came in at that aforementioned $12.4 billion. That was a 14% increase. Now, unfortunately, our cost of sales has increased as well. There's your tailwind with Nike. Obviously, the stock has held up relatively well. Again, relatively flat over the last year, but you get some dollar weakness and you get some loosening, even further loosening in those supply chains and those raw material costs. Well, that should drive up margins. Gross margins in the most recent quarter coming in at 43.3. Again, down from a year ago, 46.6. But in line with where we've been over the past couple of months, kind of in that low 40s. Obviously, if this company can reaccelerate those back into what I would call maybe the high 40s, well, there's probably some multiple expansion there as well. Now, the company has done a relatively nice job controlling expenses, demand creation, which is essentially your contracts, your endorsement deals, your marketing. That was up 8% year over year. So look, you increased your marketing 8% and you increased your sales by 14%. Very good sign for Nike. Your operating overhead expenses is your salaries and employees. That was up a pretty impressive 17%. Overall, blended together, your total expenses, your operating expenses coming in at about 15% increase. So as a percentage of revenues did tick up. You flow all the way down to net income, and we did see net income decline. So despite the stronger revenue increases year over year, most of it's chewed up by those cost of sales, inflation, a little bit to do there. And also you're increasing on the operating expense side, your net income down 11% year over year on a quarterly basis from $1.4 billion down to, we'll call that $1.24 billion. For the full year, paints almost the identical story, down about 12% from 4.6 down to 4. Again, this was the third quarter, so we're looking at this from a 9-month ended view. From a balance sheet perspective, company, yes, they've burned through some cash over the last year, but most of that has gone to either a dividend payment or buying back the shares. And the company, look, in this difficult moment where they have relatively low gross margins compared to where the company has been historically and higher than average or higher than normal operating expenses, they're doing pretty good controlling that cash balance. So nothing to really worry about from a cash perspective. They have some longer term debt sitting here on the balance sheet, but they borrowed this before interest rates really ticked up. And so this is really kind of a very low cost debt, because when you come over here and you see interest expense net, they actually are earning more cash on their balance sheet than they are paying interest on the debt. And you see through 9 months, they paid just $22 million worth of interest, which again sounds like a lot, but we're talking on $38 billion worth of revenue to spend just $22 million on interest to finance a lot of those sales. Well, it really isn't a whole lot. So nothing to really worry about from that perspective. From a geographic perspective, strong performance in constant currency. Obviously, in the United States, you're dealing with the United States dollar. So the two columns are going to be the same, but strong 27% growth here in North America. Anybody predicting a recession and all these kind of doom and gloom stuff? Guys, Nike sales year over year on a quarterly basis in the United States are up 27% year over year. Yeah, I understand the job market could get worse. Things could get a heck of a lot worse, but right now, there's not a lot of data points that are actually pointing to that. You look in the Europe and Middle East and Africa on a constant currency basis, very much up like the United States, up 26%. The key market, the one that will expand the multiple and otherwise known as had the shares higher for Nike, is China. You see on a constant currency basis, that country is lagging, just up 1% year over year on a fluctuating currency basis. Sales were actually down 8% year over year. So if they can somehow reaccelerate those China revenues, that would be very strong and very beneficial for the company. And then finally, you have your APAC region that was up 15% on a constant currency. You flow all the way down to EBIT, or earnings before interest and taxes, and you see North America was up 23%. Europe was up 10%. China's still struggling though. Okay, they've got to reaccelerate those sales. As you see, Greater China earnings essentially declined 10% year over year. APAC was essentially flat. And then from the stock chart perspective, there's not a lot to see here, guys. Pretty simple. When Nike's towards the bottom of this channel, which is represented by now what I'm drawing in here is a purple line. The stock over the past, we'll call it 40 years, has been a buy anytime it's been there. The last time it was there was actually back in November and October of 2022. This is probably when everybody was telling you to run for the hills and not buy shares. I was telling you to start accumulate towards the back half of last year. This could have been stocks like Nike. It could have been stocks like Apple and Google and Tesla and any number of stocks. When people are the most fearful, that is actually when you want to acquire stocks. Right now, Nike is essentially kind of in the middle of this range, and so it's not the worst time to buy, but it's certainly not the best time to buy. If you have a move towards the top of the range and you like to lock in profits, that obviously historically been a decent area. But for the most part, Nike has really hung out in the middle of this range, if not down towards the bottom half of it. I would wait for a move back down to the bottom. And if you like dividend growth and you like share buybacks, well, Nike delivers all of that. Hopefully you guys enjoyed today's video. We'll obviously be back with more videos later this week. Good luck with your investments.